Hello, welcome back. July market update. Tony Marlette Jr. here at Brookside Tax and Financial Group. Just a reminder, before we get into the update, you can visit us on our website, learn a little bit more about our company, and schedule an appointment. Our Facebook page, we keep a little bit lighter with staff bios, pictures of pets, kids, etc. And you can check us out on our YouTube channel as well to view old market updates and some how-to videos. So if we look at what we saw in June, we now have 6 months completed of 2023. And at the midway point, stocks and bonds have both been positive, driven by the S&P 500, the Dow Jones, the Russell, the NASDAQ, and the Bloomberg Barclays Bond Index, which have all been positive year to date. We started the year off with some concerns around a recession, which recessionary conditions were present then, and they are still present. Although we've been reluctant to use that label. Some people have been reluctant to use that label with GDP and earnings recently being pretty strong. US employment and wages are growing overall, but we have seen some subsectors that are seeing the opposite. We've talked in the past about layoffs that are pretty prevalent amongst certain job categories, and then wage growth being relatively stagnant as well. We still do have some concerns, mainly the Federal Reserve Board. We're probably near the end of the rate hikes, or the tightening cycle, as we call it, but we could still see another 1 to 2 interest rate raises in 2023 as inflation is still around and it's been pretty stubborn. Jobs have been resilient as well. We mentioned overall some headline layoffs before, but spending drives earnings, and earnings has driven this market. And we've talked about that before. So really all this market performance revolves around jobs. If we do see more layoffs and they become more prevalent, earnings will slow and spending will slow, which could curb market performance. We also continue to see geopolitical risks between the Russia and Ukraine and the United States and China conflicts as well. Investors, however, are no longer forced into the market for returns. If you remember, as recently as 2 years ago, if you wanted any kind of return or yield on anything, you had to go into the market to get it. Now, safer categories, including those with buffers, have yields and returns with limited to no risk. Thus, it's important for investors to utilize all of your resources to align your portfolio to protect from loss, take an income stream, and achieve growth. Of course, we encourage you to always invest according to your overall goals, strategy, and time frame. And if you'd like to review that with us, feel free to do so by visiting us online, giving us a call, or stopping into the office. If you reference this video, your consultation will be at no cost to you, and you can also pick up a copy of one of our books on retirement planning and estate planning as well. From all of us at Brookside, we thank you for working with us, and we look forward to continuing to work with you.